The Edgeless Horseman here. It's May 2nd, 2022. And today, like every day, we see gold and silver down and miners down. We see the same emotions bubbling up. The same negative emotions, people, talking about selling, getting angry at, anyone who's bullish and stuff like that. And typically, I think it's like when we had down days like this recently. You might get comforted if, let's say, I put up a video and explain why you shouldn't really be, panicking, etc. Based on, simple stuff like prices what you pay, values what you get. But it always happens. People get anxious and scared every time the market goes down. And obviously, if you're at a sentiment low, sentiment is already bad, and they typically, it just feeds on itself. The pain gets compounded. And what I would suggest is that that's a symptom of people not really knowing what they do. They don't have a plan. Why am I not panicking? Why am I not, running around with the hair on my with my hair on fire, and selling and just crying and complaining about this market, etc. Why? Because I have a plan. So I know what to do. The market is volatile, especially this sector. But if you have a plan, you have a playbook. It's like what Napoleon said, somewhere along the lines of, you should know what to do if the enemy appears to the front, to the left, to the right, or behind you. Basically, you should know what to do. And if you don't have a plan, you obviously never know what to do. And that makes you scared. Because the default plan everybody has is to buy something that's going up in hopes that it's going to go higher, and sell something that's going to go down because they fear it will go lower. That's basically the default plan that 95% of people tend to go to. Because honestly, I think majority doesn't even have a plan. So they don't really have any reason to point to as to why they should beat the market. If you don't have a plan, you're basically planning to fail. But what makes it even worse is that the ones who have a plan, or a stated plan, let's say, they don't even follow through on the plan. So effectively, they don't have a plan. Because obviously you can have the best plan in the world, but if you don't stick to it, there's no point in even having a plan. It's like everybody knows how to get in shape. Everybody knows that, and most people want to be in shape. But very few actually can follow through on the plan. Take the quote pain to get the gain. That's just how it is. And why should markets be any different? This is just mental pain. Depending on how you look at it. So, like, for example, if you have the everybody has heard these sayings like, buy low, sell high, or buy when there's blood in the streets. Okay, let's say you have the simple plan, which makes total sense. Buy low, sell high. That's the most, the simplest, most no-brainer plan one can have. Buy something low, and that's when it typically is undervalued, and buy it or sell it higher when it's hopefully at least less undervalued, and hopefully even overvalued if you dare stick it out that long. So it's like, if you if you have that plan, how on earth can you be confused right now? How on earth can you be thinking of selling? You only have two conditions: buy low and sell high. Does this look like it's, high? Where in the name, for the love of Alan Greenspan, how does this constitute as high? What people do again is they say they're gonna buy low, and typically they buy high here to start off with, and then they see this, and then they talk about, well, buy when there's blood in the streets, etc. Then they still have the stomach, let's say, to actually buy, and they keep repeating, but buy low, sell high, and then when we get this low, they switch the plan. They sell instead, or sell here, or sell here, or thinking about selling here. If you actually would follow the plan, has the valuations gone from low to high yet? Of course not. So it's really simple. If you say you have a plan, and first of all, you have to have a plan to begin with, otherwise you're never going to beat the market. So then the natural step is, of course, at any given point in time, since we can buy, sell, or hold at any given point in time, you have to ask yourself, what does my plan say I should do right now? Instead, you're seeing people go back and forth from, following the plan and not following plan. Maybe they were able to buy this low here, and we're back here, and time has passed, so that's more pain, and then all of a sudden they're thinking of selling. Did the buy or sell conditions all of a sudden change for the buy low, sell high plan? No. It's that most people don't have the stomach to actually follow the plan. It's the simplest plan there is. But the hardest part is actually following it. Day and night, 24/7, 365 days of the year, for as long as you're gonna invest. I think this should be pretty obvious. It's like you are your worst enemy. Because it's your fault if you're not sticking to the plan. It's not the market's fault. The market is setting you up for the plan to work or fail. I mean, depending if you have a good or bad plan. But it's up to you to actually follow through. So I don't get it. If you have a plan to buy low, sell high, why are you complaining and thinking about selling? And then you're gonna probably complain that this market is, you can't beat this market. Well, you didn't even follow your plan. So then you're no better than the rest of the 95% who doesn't beat the market and either don't have a plan or have a plan and does follow it. Like, again, with getting in shape, etc. To have a plan, to know what to do, is a big difference than not if you follow through on it or not. I know how to get in shape. But if you don't follow through on that plan, you're not going to get in shape. So how are you going to follow through with the plan of buying low, selling high if you're selling low? If you can answer that question, I would be pretty shocked. And on that point, it's like, okay, why is pain typically negatively correlated with gain? Let's just think about why is such an easy plan so hard to follow through on. We are here. This is just again Bear Creek Mining, a junior proxy sentiment index I use, or a sentiment proxy I use. What is the typical 2 things that brings the most pain to people? Delayed gratification and appearing wrong for an extended period of time, plus a fall in price, paper losses, looking at red. Those are, I would say, the main 2 drivers of pain. How do you measure pain? And basically those are compounding, because if you have a stagnant price for 6 months, that's still more palpable, or you can cope with that easier than having a 6-month decline. So okay, let's again, from Napoleon's perspective, if you have a plan, you should know what to do at any point in time. Okay, so if you have the buy low, sell high plan, let's fast forward to okay, this is way too long, but let's say this was a year from now. Let's just assume this is a year from now. Okay, And we know that sentiment and price has headed down here, even worse, down to the almost exact bottom of 2015, like the max, almost the max pain in 20 years, let's say. Okay, what has happened? Time has passed and price has gone down. So that's compounding pain. Not only has time passed where you just look more wrong and more wrong and more wrong and more wrong, because again, the market is telling you you're wrong. Because most people, if a stock goes up, they made a good buy. If a stock goes down, they made a bad buy. I mean, that's how typically people think. They let Mr. Market be the judge of their results, or judge of their effort, let's say, in any given time frame. So, I mean, if you bought here, the market has told you for 1.5 years that you're stupid. That's what it's actively telling you or suggesting to you, that you're stupid. So it's easier at this point in time. I mean, you're down. Yes, the market is saying you're stupid, and it's been X amount of months, let's say. So you've been forced to cope with the fact that on average every day Mr. Market is saying you're stupid, and has shown that the evidence he has is a decline in share price. So an extended period of feeling like you're wrong, being accused by Mr. Market that you're wrong, and seeing red in your portfolio. So if the longer this shopping action down here continues, the longer the time Mr. Market has been telling anyone who's still in the market that they are wrong. And that's obviously where conviction comes in. Because not many people can withstand that kind of mental pain, to appear wrong for an extended period of time, and every additional day of having Mr. Market, let's say, piss in your face. People are eventually, vast majority of people are eventually gonna throw in the towel. They cannot stand another day looking at the red in their portfolio and not feel like an idiot. That's like, having an increasing crowd of people for a long extended period of time saying you suck, you suck, you suck, you suck. Eventually people are gonna fold. And of course, if price goes down as well during that time, that's gonna compound the pain. But like I spoke about in a recent video I did, if we know, or since we know, that sentiment always swings, we go from low to high, bear to bull, bear to bull, bear to bull, and back again. We know that we're gonna hit a sentiment high. We don't know when. But regardless if the sentiment high is here or here, here or here or here, any additional down day brings us closer to the up day or the sentiment high. By default, I hope that makes sense. Of course, there's some feedback loop that, stuff that happens now might, that we can't know, of course, but I mean, present events change the future, obviously. So if stuff happens, this actual timeline might change, but that doesn't matter because we can't control that. That's impossible to know. So why even think about it? Worrying about things you cannot know makes absolutely no sense. So it's good enough to know that we will hit a sentiment high one day. Okay, and by definition, in that case, that means that every passing day gets us closer to that sentiment high. So as time passes and pain expands, pain compounds, and especially if it goes down in price, what happens? Every additional day brings us closer to the upside. So the buying opportunity gets better and better at a given time, at a fixed price, simply because the fact that we're getting closer and closer to the sentiment high. So if price was stagnant for 6 months, this buy would be a lot better than this because we're inevitably closer to the sentiment high. So we will have returns happening in a future returns are going to happen in a shorter time frame. So the compounding annual growth rate is going up simply from time passing. And if you have a decline in price as well, again, compounds the pain. That means that the future returns when we hit that sentiment high is going up as well, and up in a hurry. You can see the percentages up there. This is just obviously an example, but I hope you get my point. So not only will the returns be greater going forward when we hit sentiment high because sentiment is getting worse and worse, so the delta from this kind of extreme sentiment low to a sentiment high is higher than from this sentiment level here, which is still, atrociously bad. So basically the buys gets better and better and better and better. And it's, again, you don't only have to think about the future returns, but they will happen in the shorter time frame. So again, it's going exponential. The buying opportunities are getting exponential, and thus the future cost of selling goes down. Way up, way up. And again, if you have this simple strategy, I'm gonna buy low. Let's say you use Bear Creek Mining as a sentiment proxy, or I mean, you can just look at the valuations out there, and you will know that you're buying low, aka cheap. So where is the confusion? Are we high yet? No. Okay, we're low. Yes, then buy. If your plan is to buy low, sell high, it's not rocket science what you should do right now. It's not rocket science what you should do if price goes down even more. If price drops 30% tomorrow, you should know even better what to do than today. If price drops 50% tomorrow, that's going to be the most obvious or easiest decision of your life. So I hope you get what I'm saying. It's like, if you're anxious, if you're fearful, etc., that typically means that you either don't even have a plan, so you're gonna lose regardless. It's like, what happened? You don't even have a plan, so how on earth are you gonna even beat the market? Because the market typically has no plan. It's short-term oriented, it's chaotic, it's volatile. So if you don't have a buy or sell condition, you don't even know why you should beat the market. But if you have a buy and sell condition, the only thing you have to do at any point in time is ask yourself, is my buy or sell condition met? So in case you're a buy low, sell high kind of person, what has changed? Nothing has changed. Absolutely nothing has changed. And you see stuff like this today. Intact growth stories, etc., down 10 to 16%, or 5 to 16%, whatever. It's like, it's pretty obvious what's the right move. Again, if you're my main strategy, my simple plan is to buy intact growth stories as cheap as possible and hold them until growth tapers off. If growth has not tapered off and the story is intact, I have no sell condition. Has anything happened for SK Mining, for example, except going down in price? Nope. Are the projects still there? Is all gold, silver potential, etc., is that still intact in the ground? Absolutely 100%. What has happened? Price has gone down. And what is my plan? Buy intact growth stores as cheap as possible and hold them until growth tapers off. And obviously, if I just bought more increasingly as the lower price was in SK, obviously that has worked very well. And that goes for a lot of growth stories, Eloron, Newfound Gold, Goliath. Okay, what else do I own? Irving, which has been slammed, actually gone up a lot recently. Like Western Minerals recently hit a high. Seems is a new story. Caster Gold, same thing here, there. Nevada King. I mean, pick Pick any growth company that has an intact story. Just look at the past 1-2 years. I mean, a lot of them might be close to down, but that's because the sector is down. So it's like, I guess my main point is, ask yourself, do you even have a plan? If you have a plan, remember that it is absolutely worthless if you don't follow it at in every second of every day, of every week, or every month, of every year. That's what I talked about in a prior video, but winning is not an event, it's a process, it's what you constantly do. So again, if you have a plan of buying low, selling high, there should be absolutely no confusion at all what you should be doing right now. And it should be even more obvious what you should do on a day like this. And again, like I talked about, if we know that the sentiment high is going to come, we don't know when, but we know that every additional down day, every additional day sentiment gets worse, gets us closer to the sentiment high by definition. That's not that's not something magical. That's by definition. Okay. So you know that as time passes, even at a stagnant price, and assuming your stores are intact, for example. Again, I don't own Bear Creek Mining. This is a proxy. The buy gets better and better, hold gets better and better, and selling gets worse and worse. And if price goes down as well, selling becomes much worse, buying becomes much better, and holding becomes much better. This is literally as simple of a plan that you need, but the thing is you need to stick to it. So again, if you if you're comfortable, like, I don't know, 2-3 days ago when price was higher, and now you're panicking because price is lower, I mean, that should tell you something about your problems. It's not the market's problem, it's your problems. You don't have a plan, so you don't know what to do. Whereas I have a plan, and I think if the only thing you're doing is trading sentiment, this is so obvious what you should do. There's no confusion that this is low. This is obviously low. If price goes up here, I mean, we're obviously closer to the sentiment high than this a sentiment low. Meaning worse buying opportunity than here. And way better selling opportunity than here. If you're just, for example, doing trading sardines. So again, I sure hope this makes sense. I mean, it is almost brain dead easy when you think about it. That's why it's we who mess things up. It's Mr. Market that tests us all. Every day Mr. Market tests us. And every day we don't stick to our plan, we fail. So again, if you had a plan of buying low and selling high, and you bought here and you sold out here, you didn't stick to the plan, obviously, because it just went lower, which means better buy according to your plan. And your plan doesn't allow you to sell until we go high. So you could have stuck it out like, talk to yourself about, buy when there's blood in the streets, buy when there's blood in the street, buy when there's blood in the street, and you buy all the way down. It's like, good for you, you stuck to your plan. Let's say it goes up, maybe you actually sold a bit here, who knows. But let's say you didn't, because you're waiting for this to be actually high. I mean, this was just a blip. And then it goes down again, and then you sell out here, for example. Now you can't take it anymore, because now it's you appeared wrong for twice the amount of time than this bottom. Because okay, if you could, let's say you were able to hold out for this period of time, and looking wrong all the way down here. but then you double that time of appearing wrong, not sitting on green results, let's say, not sitting in a profit, and we went all the way here back to the, let's say, approximately the same level, but even more time passed. So you looked wrong for double the amount of time, and you can't take it anymore, so you sell out. Obviously, you didn't stick to the buy low, sell high plan in that case, because how on earth is this high? Now, it is extremely obvious that this is low. And if it's low 6 months from now at the same level, that's obviously low as well. So it's like I'm calm because I know what my plan is. My plan is to buy cheap as much as possible, buy even more the cheaper it gets, and then sell high sometime. But more specifically, my strategy is to, whereas a trading sardine like Bear Creek Mining just goes from high to low back again. So basically here you actually have to, you can't just hodl this one pretty much. You have to actually get out during the highs. But it's like in growth stories like SK Mining, or again Newfound Gold, Allure, whatever, the ones who have intact growth profile and can add value for years to come. Typically, the highs are higher and the lows are, except this, where right now we have option selling to meet tax commitments due to options, for example. So there's been one in the management team who's sitting up big profits on his options and will have to pay a lot of taxes. So that doesn't help, obviously. From a timing perspective, and there are warrants that expire in August, for example. I have said warrants, so I might actually also before August be forced to sell some, but that's obviously artificial selling. I will, convert that to shares by paying for the warrants, of course. And if I can find something else to sell than SK, I will actually I will own more shares than ever. So that's also something you have to be, aware of, again, because Mr. Market is gonna do stuff all the time, and this is artificial selling, and nothing has happened for SK from like this period down here. It's like we closed the private placement, we have artificial selling during a sentiment low. That's all there is. But most other stores, I mean, you take a look here, for example, Western Alaska, like recently closed their financing. I think they have it closed. Okay, cashed up. Story more intact than ever, closer to drilling as ever, 15% down, okay. Well, it was up like 20% yesterday. But it also shows, I mean, the swings. Nothing happened in one day, and you have 20% up and then 15% down. If you're buying the updates, only the updates, 20% up, because you're not in the business of buying low, selling high. You're in the business of buying high because you think it's going to go higher. Well, congratulations, you're down 15% in a day. But if you stick it out, I think that 15% loss, paper loss, is going to turn into a profit, because right now the case is intact. Same with Snowline Gold, Goliath, Cassier. It's like when I want to make it easy for myself, it's like today. Market open, I went out for a walk, then came back, had some dry powder that I had just wired. I just looked at what intact growth story is down the most today, because this is my plan, and then I just go out and put some bids in, because I have no reason to believe that stories like SK Mining and a bunch of stories here are not just going to simply go like this over the next couple of years. So unless the sell conditions aren't met, I'm buying, and increasingly so the lower it goes. That's literally as simple as a strategy can get, almost. It helps, of course, to pick the good companies. It's like if you're in shitty companies where the value creation trend isn't actually up, yes, you're gonna lose no matter how long you hold the stock for. So obviously it's a prerequisite to pick good companies. But just to just harp on the plan. If you don't have a plan, get a plan, write down a plan, and stick to the plan every day, every second. You don't do a buy or sell. You don't, you don't buy or sell unless it's in accordance with your plan. Otherwise, you don't have a plan. So you deserve to lose in that case. That's the only, literally the only. If you just do those two things, actually create or have a plan and stick to the plan, you are probably gonna beat the market. If you do neither of those, or you have a plan, or if you don't do both of them, if you have a plan and don't stick to it, you're gonna lose. If you have a plan, or otherwise you don't even have a plan to begin with. So I hope this makes sense. I mean, it literally is. It's we who do this to ourselves. We shoot ourselves in the foot because when pain compounds, we tend not to follow the plan. But the ones who follow the plan are going to make more and more and more money because they are going to buy more and more as time passes and price goes down. The ones who sell down here or here, they sold the best opportunity you might ever see, pretty much. And the ones who bought it, uh, you know, bought at the best opportunity, there might be for the next 10 years. Why? Because the one who sold didn't stick to the plan, and the one who bought stuck to the plan. And since the plan, if you follow the plan, makes this the best, obviously the best buying opportunity there is, it shouldn't be hard to buy this. But again, most people don't see it that way because they cannot cope with the pain of looking wrong for an extended period of time and sitting in a paper loss to boot that might be higher than it's already been. So they're sitting at max pain, max time duration, where the market has spat in your face and said you're wrong, you're an idiot, you don't know what to do, and max paper losses. Whereas it's Mr. Market is Mr. Market, and it's the fact that we have a plan, whereas Mr. Market does not, that allows us to beat it if you stick to it. Thanks for listening.